evening to you, and actually welcome to you on GTV. We're here to talk business tonight. It's cold out there, but business must go on. You're welcome to Business Advocate tonight, and we're discussing implementation of Income Tax Act 2015. It's created a whole lot of discussions, and it's our time to take you through the implementation of that Act 2015, Act 896. Now, following the introduction of the Income Tax Act 2015, Act 896, thereafter known as the ITA, which became effective on the 1st of January 2016, it has been clear that several members of the business community are not aware of some salient provisions of the ITA that are either beneficial to their businesses or could have adverse effects on the operations. According to the Private Enterprise Federation, PEF, the AGI, and the AG actually, some provisions of the acts may have a tendency of increasing their cost of doing business, thus hindering the ability of businesses to be profitable and competitive in the long term. The PEF and also the AGI, if you like, with the support of BUSAC Fund, having engaged in advocacy to raise the competitiveness of Ghanaian businesses. Likewise, it's sister organization, and which has for purpose of filling the knowledge gap for members concerning the introduction of Income Tax Act 2015, Act 896. Has, with the support of the Conrad Adenauer Foundation, been organizing strategic workshops nationwide, and I'm talking about the PEF, mainly to sensitize members on the opportunities available to them in the ITA and how to take advantage of these opportunities, share the compliance obligations that could pose major risk to businesses as a result or failure to comply with such obligations, discuss the selected gaps created by the ITA that could be inimical to business growth and sustainability, and also educate members on common mistakes that lead to the payments of interest and penalties on tax liabilities, among other issues. Tonight, courtesy of BUSAC Fund, with support from the GBC and the GJA, Business Advocate will examine the implementation of Income Tax Act 2015 Act 896 so far and analyze the prospects and challenges of its actualization, vis-a-vis its implication on businesses. And let me give you our lines for this evening once again. Our WhatsApp line, SMS line, SMS purely SMS is 0261783382. Our SMS live once again is 0261783382. Good evening, welcome to BA tonight. Let me quickly introduce my guest to you this evening, and we'll take a look at the beef of this evening's discussion. On my immediate right, I have Mr. Isaac Nyame, who is a tax expert, a renowned one, of course, with the Private Enterprise Federation. Good evening, sir. Welcome.
Good evening.
I also have Mr. Edward Jamina, who is the Deputy Commissioner in charge of policy and programs at the Ghana Revenue Authority. Good evening, sir. Welcome.
Thank you.
Congratulations, actually.
Thank you.
Ahead of me, I have Nana Osaibonsu. Nana Osaibonsu, the Chief Executive, Private Enterprise Federation. Nana, good evening.
Good evening, sir.
You're most welcome, sir.
Thank you.
Good. Now, first of all, Nana, we don't have the AGI here, but I believe that viewers want to know, is there any relationship, any synergies between the PEF and AGI, Association of Ghana Industries, and the Private Enterprise Federation? They look like they're doing the same thing, but what's?
I mean, indeed. I mean, AGI is a member of PEF. PEF was created by 4 business associations that were existing at the time in 1997. Where each one was fending for themselves, and there was no cohesive voice for private sector. So you had AGI, Association of Ghana Industries, the Ghana Employers Association, the Ghana Chamber of Commerce, and the Federation of Association of Ghanaian Exporters. They realized that on an individual basis they were not getting results, so they decided to create a central mouthpiece, a vocal voice for the private sector, and that's what led to the creation of Private Enterprise Federation, PEF. So subsequently, the Bankers Association joined as a founding member, and then later on the Chamber of Mines. So for 20 years, there were 6 big business association that constituted PEF. So AGI is a part of PEF. But for some reason, there's always some kind of understanding or misunderstanding or connotation that AGI is a separate institution than PEF. No, they're all part of PEF.
Great.
All the big business institutions, associations are all part of PEF. As of now, we are about 15 business associations, including the insurance industry players, GIA and brokers, the telecoms, the oil marketing companies, and just about 3 days ago, the bulk distributing companies, the BDCs, became the 15th member of Private Enterprise Federation. Yes.
See, they are welcome aboard, actually.
Yeah.
Then that leads me to my next question. Did what you've narrated encompasses, all the bodies under the private sector? Do you have any relations with government, and how?
Well, we do have relationships with government, and I think you're aware that previously we had a structured dialogue sessions every quarter.
I remember at the Vice President's office.
Yes, the
What
last one
happened
was.
to that, Nana?
Unfortunately, it's not been regular of late for whatever reason.
When the last time you were held?
The last time, I think, more than a year ago.
Oh, my
yes,
God.
yeah. So obviously, the dialogue had been reduced to a point. But now, in the advent of the resurrection of the private sector development strategy, which has the Presidential Advisory Council, of which we all sit with the President, we think that will be revived. And also, but we have access to the various ministers, the various sectors, sector ministers.
Okay.
So as much as we're not at the presidential level, we're still at the executive level of sorts in the administrating and oversight ministries that we work with.
I see. This might go to Isaac.
Yeah.
Isaac, what has been some of the changes that have been introduced in the ITA that were not in the repealed act, the former Act 592?
Okay, the one very remarkable change has been the taxation of residents of a country of Ghana on their worldwide income. Their worldwide income, meaning the income that they make from Ghana and elsewhere. Previously, the law was that the income that was made in Ghana was taxable in Ghana, and then those ones that are made abroad in a foreign country, until remitted to Ghana, they are not taxable.
I see.
In other words, you need to take steps to bring the money to Ghana, and then you have to account for tax on that. But now, the way the law is structured now requires that whether or not you remit the money to Ghana, you are liable to tax on the income that you make abroad and also the income that you make from within. That's one of it. The second thing I would like to talk about is about the taxation of chargeable assets and gifts. Now, gifts tax used to be taxed at the rate of 15%, and also when you dispose of an asset, which the law term as chargeable assets, something like land, building, shares of a company, etc., we're also taxable at 15%. But now the capital gains tax has been collapsed, let me put it that way, and also gift tax has been sort of brought together with if you're a company and you dispose of a chargeable asset, that chargeable asset will be taxed on you as part of your business income. Yes, and the tax rate applicable to business income is 25%. So you can see that there's an increase in the tax from 15% to 25% effectively. That also applies to gifts. Yeah, and maybe to mention the third one has got to do with pre-incorporation cost. Most businesses, like the members of a PEF, will normally have to go through a process of incorporation at the Registrar General Department just to create a legal entity, and to be able to operate as such.
Recognized.
Yes. So before pre-incorporation, there are a lot of costs that will be incurred in doing that. And sometimes even a pre-incorporated, a company that has not been incorporated tends to it will at the same time incur, so you may even make revenue during the process of before the company actually becomes a legal entity. And so now what the law has done is to bring that into the new law to say that any expenses you incur before pre-incorporation are deductible for tax purposes, and any income you also make before pre-incorporation, before incorporation, are also taxable. So that, I guess, is by way of widening the tax net by bringing, yes, that sort of thing, by bringing that into the domain of taxation. Yeah, there are a couple more of those changes.
We would delve into them as the program progresses. I saw Edward nodding. Jamina, what's the issue? Because I realized you were eager to come on when Isaac was on the floor.
Yeah, thank you very much. I think the issue that he raised regarding worldwide income, we have to look at it from a wider perspective. Why are we moving from the source base to the worldwide base? The source base, as we used to practice, has been seen to be very narrow. And if you look at the way businesses have been operating these days, what it means under the old law is that if you are in Ghana, you are resident in Ghana, you sit here, use your computer, for instance, to work for somebody out there. If you earn that income will never be taxed under the old law. Which means that people can sit here, earn income, and that income will never be taxed elsewhere. What this new law is saying is that once you are a resident person, wherever you earn income, whether in Ghana or elsewhere, that income is taxable in Ghana. And this provision is there to correct the narrow, distorted nature of the old income tax law that we had. So that is that when it comes to non-resident person, it is still on the source base. Nothing has changed. Okay. So when it comes to a non-resident person that has earned income in Ghana, the tax will be on income derived or accrued in Ghana. That's it. But for non-resident person that has a permanent establishment in Ghana, that will still be based on the worldwide source. Now, the other issue he raised about capital gain, which I have to correct the distortion here, is, yes, under the old law, we had capital gain and gift tax as treated as different chapters in the law. But that was also seen to be very narrow. Why are we saying this? You have a capital asset, business asset, where the tax law allows you to claim capital allowances and other deductions on it. When you dispose of this asset, it sounds to reason that it is the same business asset that you have sold. So why should it be treated differently? So what this new law has done is to correct the distortion. And again, it is not wholly true that by subsuming the capital gain into income, the tax rate will be 25%.
What will be the rate?
It depends. The rate depends depending on the business that you are operating. For instance, if you are in holiday period where you don't have anything to pay, the gain that you make on the disposal of your assets will be 0 or 1, depending on the rate applicable to you.
Edward,
and again,
let me through that again. Talking about holiday period, what actually do you mean? If you're on holiday period and you want to dispose of
some companies are granted tax concessions.
Exactly.
So during the concession period, they are given either a reduced rate
or none at all.
Or none at all.
Okay.
So during this period, if you dispose of any assets and there is gain, it is the rates applicable to you at that time that will be applied on your capital gain.
Okay.
So it's not a blanket statement that capital gain tax rate is 25%. I think that is. And again, if you look at this new law, under the old law, if you dispose of a capital asset and there is a loss, the law will not recognize that. But under the new law, the law will recognize it.
In which sense?
It will recognize it as part of your business loss, just as it recognizes the gain as
so it will be
business
taxable.
Business loss will be allowed to be carried forward.
Okay.
Yeah. So, you know, we need to balance the equation rather than to look at it from one side to say that capital gain has been subsumed and therefore the rate of capital gain has been increased from
maybe there's not been much explanation probably.
Exactly. And that is why this forum I'm trying to explain explain that. So it all depends. Of course, if your corporate tax rate is 25% and you make a gain, yes, it will be taxed at 25%, but you should know that what asset have you sold? It is a business asset. So why should it be treated differently? This provision, all of us have seen that it was very distorted because one side of the same asset, you have been allowed expenses on it. The other side, you selling the asset and you have to pay tax at a reduced rate. I think it was very distorted, and this new law has one of the objective of this is to correct the distorted nature of the old income tax law. And when it comes to gifts, gifts which you mentioned, yes, business gifts should be treated as part of business income. Investment
Give
gift,
an example of a business gift.
Business gift, for instance, if you take GBC, if GBC is a taxable entity and you have a donation from
cameras or something,
that should be
taxable,
quantified and added to your income because that's part of your income. So, and when you receive that under the old law, gift was treated as a separate chapter. This new law says whatever you receive as business gift should be added to your business income. If it's an investment gift, you should add it. But when it comes to individual, nothing has changed. And this one, we must be clear on that. The individual has the opportunity to elect and pay tax at the rate of 15% on the gain or add it to the business, the income of the individual. So for instance, the individual who has disposed of his or her assets can decide that I want to add it to my employment income. Assuming my marginal rate is 10%, I want to add it to my employment income and pay tax at that rate. Or I choose to pay the gain on the disposal of the capital asset at 15%. So these are the things in the law. So it's not a blanket statement that the law has come to increase taxes.
I see. Dana, do your members understand these?
Not all members understand the implications, but I'm very, what should I say, a little disturbed by Edward's interpretation. How many companies are on concession? How many local companies are on concession? Majority of our local companies are paying the average corporate rate of 25%. So when you're interpreting it to mean that you're only going to pay at your concessional rate, the only people who get are the strategic investors who are carrying concessions, not our local private sector SMEs. They don't. They are paying the average taxable rate of 25. So once you say that the capital gains are going to be taxed at your corporate rate, they're going to be taxed at 25% because they're not on concessions.
That's right.
So that definitely is a difference to the local people. There are others about the things that we were talking about is loss carry forward, which previously was not maybe in the Tax Act that you could. Now generalized loss carry forward of 3 years in average and then 5 years for eligible priority sectors. Now, do we look at the implications of the loss carry forward? A company is taking a chance to invest in capital assets to maybe improve its competitiveness. The asset may not be able to yield an income threshold within that first 3 years to offset the loss. What happens after that? They cannot deduct again. So we actually stemming and preventing business innovations and businesses taking advantage to improve themselves. When we're doing the taxes, I want us to step back and say, how far are we going to generate revenue as much as encourage the source of the revenue to be better tomorrow so we can get some more? But if you look at it from the perspective that, okay, we have the authority, we can now go and tax these guys who were not there yesterday or those guys who are there today. What about tomorrow? Because today, yes, indeed, they were capable. Tomorrow, they don't have the ability because they did not innovate. They don't want to pay the, take the chance of creating the asset where they cannot take the capital allowance. So they become myopic. They sit there and things will evade them and pass by. So our small and medium enterprises remain small. What we're looking at, development. How do we encourage the private sector, the SMEs, to develop in a way through our tax system? By sometimes they've been even incentivized. If you do this, you can get the benefit, to the point even where you can get tax credit. But here is the point that we're taking even the little that you can, because you cannot carry the capital allowance in excess of the year on which you invested. Now, the other alternative is if you have additional losses, it can be carried in 3 years. At the end of the 3 years, what happens? So these are some of the things that I want us to look at the policy framework, that the objective of the policy framework. Is it only to increase revenue or to increase development? We have to look at that.
On the back of that, let me ask you, how are members of PEF and other allied organizations affected by this 25% taxation regime, regardless of whether or not
this
they
is
have
new.
concessions?
It started 2016.
Yeah.
So by the end of the year, a lot of these companies will now get to know that, geez, this is how it's affected me. And now what are my projections? Am I going to retool, or am I going to just stay put because my internally generated fund had been limited by the excesses that I have to pay? So you have to look at from that perspective the survivability of the companies, the sustainability of the operations. How do we put ourselves, because what we're doing is we want to grow our private sector, and it's at the benefit that accrues to the government itself. Because if the private sector grows and becomes what, the revenue base is going to be expanded, because I have more profit and it can be taxed at 25%, whatever rate. But if you cut me down and my profit margin is thin, very thin, that is the result of what you're going to get as a beneficiary of the tax system.
Is there collaboration between the private sector and the tax managers?
I would hope that going forward, because now you see a lot of amendments coming out. There were a couple last month. Well, I hope that we sit together and said, okay, because private sector will love government to be able to execute its agenda every which ways. So we want to see that government have the revenue that needs to be obtained. Let's sit together that you do not destroy the chicken that lays the golden egg. Because at the end of that threshold, you may get a one-shot deal, and then in the next subsequent years, it's going to affect you. So we want the dialogue.
Okay.
When we say dialogue, sometimes it's just sitting at the table and talk, and then we go home and they dismiss it. Because every year we have presentations, pre-budget presentations and discussions. It's only a few occasions.
A lot of inputs here.
Yes, and a few occasions that our inputs are consolidated into the actual tax system. Let's see something. The business perspective. How would you, business sitting in our chair, would you create the quantum of tax revenue that we're looking for? Because if we look at the tax as a ratio of GDP, maybe it's 14.9. Our competitors and the peers in other regions are doing 18 or 25. How do we get to that point? Say, okay, these are the things that we can sacrifice. These are the things that will also help us to grow, and together on the left side, because you see, government revenue should not only be looking at how does the government get the revenue to execute its agenda. It should be looked at how the government will prioritize its expenditure to use the limited resources available. It's not like I want to go to the moon, so at all costs I have to tax to get to the moon. No.
Okay, a quick one here, then I allow Isaac to come in.
Yeah, thank you very much. I think Nana talked about the carry forward of loss provision and the capital allowance provision as provision which is going to affect the business setup, but I don't think so. Under the old regime, companies were not allowed to carry forward losses. And this must be made clear. Only few companies, selected companies, were allowed to carry forward losses. Under the new regime, all companies can carry forward losses. And as he said, those in the priority sector can carry forward losses for 5 years or others 3 years. But when we say carry forward of loss for 3 years, it doesn't mean that when you earn loss this year, you carry it forward 3 years, and that ends it. Anytime you make loss, that loss is carried forward 3 years. So it works like you started your business this year, 2016. You made loss 2016. 2016 loss can be carried forward 3 years. If at the end of 2018 you made another loss, that loss can also be carried forward for another 3 years. That is how it works. So if you have a situation where the interpretation people are giving to this provision is that the law is for a fixed period of 3 years, and therefore if you're unable to utilize the loss within the 3-year period, you forfeit everything. It doesn't work that way. Now, the capital allowance provision, what the law provides is that you cannot defer. Now, we have instances where taxpayers who capital allowance is due decide not to utilize it as part of tax planning, tax evasion scheme. What this law has done is to prevent that practice.
Okay.
So it's not something which is there to have effect on businesses, not at all. What we have to know is that even under the old regime, where we are allowed to carry forward capital allowances, we didn't have that.
Okay.
So, but this new law has now given us the opportunity to carry forward our losses, and I think government should be lauded for this provision. Yes, that is because it is good for businesses. Because you were not under the old law. For instance, you made a loss in 2014. 2015, you make gain. Your huge loss made earlier on will not be considered. This time around, you are going to consider that one. It's not good for businesses.
Businesses will speak for themselves. I mean,
I think this is something that Nana should,
Isaac,
applaud.
Yes, you wanted to come in at a point. Yes, let me hear you.
I wanted to talk about the loss carry forward. I mean, we know that the average business starts when a business is started. It takes about not less than 5 years for the business to begin to settle down. Between the first year and the 5th year, you have a loss in the first year.
And am I running into the second year? If you're okay.
And even in the 3rd year. In the 4th year, you might not still make a profit. You might not make anything. And so it means you lose the right to use the first year's one. That is the reality. You see, you lose the right because it's for 3 years.
Okay.
It's for 3 years. So the first loss. So we are looking at FIFO basis. FIFO basis, first in, first out. First in, first out. So the first year's loss should have been relieved by the 3rd year.
It's good.
And you find out that most businesses by the 3rd year they are still struggling to start. You see, and so we need to look at this thing on a very
Broader
perspective. You see, so that's my comment on the laws. That it's not that okay. Yes, he rightly said that the laws is you can carry forward losses and set up against income for in the future. But you see, it is possible to lose the first few years' losses because the business will not be able to make profit in the fourth and the fifth year. Okay.
Let me come in. There's a sunset period for every loss, and that's 3 years.
Yeah.
So the sunset from 12 to 2015, but the one that you incurred in 2015 is exhausted by 2018. The one you earned in 2016 is exhausted by 2019. And he also, Edward also mentioned the deferment of capital allowance. It's a business decision. If the business thinks that they anticipate to invest in big items tomorrow or in 2 years, and they defer the capital allowance so to take advantage and you're applying it at that year, it should be permissible because this is a business decision to be able to continue business to become competitive. We should not look at it from the fact that, oh, since it is available to you today, at all costs, do that. Take advantage. Let me also come in from the angle where, the Commissioner General can even declare dividend for a company when the investors themselves have decided that we're not going to, declare dividend in a period because we set up a company, we put our capital in it. We said we wanted to grow for the first 5, 7, 12 years before we earn any dividend. And then Commissioner General says, hey, these guys are making tons of money, but they haven't declared dividend. Okay, I can order them to declare dividend and tax withholding tax on that. That's not a business decision. A business decision is for the investors. Don't invade in the boardroom and disallow businesses to take advantage of certain things that they invested for. When we look at it from that perspective, that's why I said, let's sit down. As much as you want to increase your income, you don't want to destroy the base. And those are the things that together we can say that, okay, this is, to me, an invasion of boardroom decisions that should not occur. If you find ways that they're not declaring dividend, that is a business decision, allow them other things that they can do with it, And when it comes, there's so many things that we can do together that would achieve the same purpose without destroying business.
Okay. I was reading that manufacturing businesses located in regional capitals, except Accra and Tema, for instance, will attract a 75% corporate tax. Is it so?
Yeah.
75%.
There's a rebate.
Okay.
Let me try and
quickly on that one. Yes.
Manufacturing business located outside Accra, the regional capitals, they have a tax rate of 25%. What it means is that the corporate tax rate of 25 less 25% of that, which means that they pay 75% of the corporate tax as their corporate tax.
Okay.
That is how it works.
Okay.
And those outside the regional capital is 50%. So what it means is that if you have a manufacturing company located outside Accra, Tema, and outside the regional capital, the corporate tax rate is 12.5%. I think all these are some of the incentives to businesses to locate in the other part of this country to create jobs for our people.
Now let's look at how hard industry is hit by these taxes that we're talking about, industry and business community, for instance. How hard are you hit by these?
Well, I mean, the moment you take away internally generated funding from a company for other purpose than what they were possibly putting it there for some retooling, some adjustments, some business opportunities, you actually limiting the business capacity to grow. Businesses should not be standstill. Businesses should have opportunity to grow at any given point. And that is how businesses create jobs. Nobody sets out to go and create jobs as a business. They go to create a business to make money. And once they get the market share and they're growing, they expand, they need additional help, and that's how jobs are created. So when you don't allow them the use of IGF and to grow, it also comes back to the point that the ability to create jobs is limited by that. So those are the things that we want the both sides of the policy to see that Edward is the implementer. It's not a policy decider. The people making the policy decisions should look at us and say, okay, how do we grow your sector? Let me give one example, agriculture.
Okay.
Under the GSGDA 2, government itself had declared agriculture as the lead, and even Africa Union as the lead sector for development. Agriculture was commanding 0 taxes on most of agriculture. Now you have 1%. We think 1% is nothing, but look at the quantum that it can create. So are we looking for agriculture investment to escalate, or are we looking for agriculture to diminish? And if you look at even the economic returns and economic indices, agriculture itself is not growing. And this is a sector that's supposed to lead in the development of the nation. You will expect that instead of the 1%, they said, oh, if you go into agriculture, because of the risky nature of that sector, we're going to give you 5% if you look at this year. If you do X, we give you maybe 7%. This is an incentive with a sunset date that within the 5-year period, we exhaust it, and once you become profitable, then you become a corporate institution, you pay. Those are things that together we can bring to the table. But we don't just put 1%. If you go into the act, you see a lot of 1%, 1% that had been imposed on where there was 0. You know, and what are we looking to do? To just create a percentage of tax revenue as in growing compared to GDP, or to grow the economy to the level where there's a lot of base to pay taxes to influence the tax revenue of government. So I think those are the areas that businesses are concerned. Who is going to take the risk to go into agriculture now? Now that there's additional taxes, when there was 0, and 0 did not attract even any investors.
That's right.
You know, so we have to look at the perspective of what's the objective. Is objective just revenue, or objective is to develop the economy? If that's the case, then we have to look at both sides of the yard.
If you're watching us, we're discussing the top implementation of Income Tax Act 2 2015, Act 896. And our SMS line 0261783382. The SMS line once again 0261783382. Please send in your concerns this evening. Nana, is there any, or are there any positives in this new tax?
Yes, there are. There are some positives as to, but. As much as I want to point out,
they are insignificant.
They possibly insignificant compared to the damage.
Right.
Yeah, compared to the damage. So that is how I said, look, if we really stick together, there are things that are changing, that I understand there's things in the pipeline to amend some of these things that we're complaining about. Now, do we need to go there before we come out? We shouldn't. So we could have avoided this kind of the difficulties. And some of these issues, if you have, as I said, and Edward had done some work, he and I had discussed some work previously on a capital allowance for a company. Now, the investors base their investment decision on availability of capital allowance for them. Now that we're going to, and that was unlimited. Now that we're going to do it, do we grandfather that option, or do they come immediately under that? The interpretation is blurry. So these are things that we have to clear to attract the investors, to give them confidence that, look, this thing is not applicable to you, or we give you a sunset period to be in compliance instead of immediate compliance requirement. So those are things that we can together make adjustments to bring the business confidence, because a lot of businesses are scared and concerned. And the fact that they cannot interpret. So compliance, look, the SMEs cannot afford a tax lawyer or a tax accountant to defer and determine all that liability. But ignorance is no excuse. If you are not in compliance and the tax man gets you, there's 125% penalty coming to you for things you didn't understand. And this, all that we do now, I think even to me, GRA should be paying us to do the job for them, because we're doing the awareness around the nation that the GRA itself should have been doing,
Interesting. But let me find out this from you, Isaac. How does the penal provisions compare with those of the Repealed Act?
Yeah, I must say that the current penal provisions are really very high,
Very tough,
high,
yeah.
and rather inimical to business. Because when just about a week ago, a client of mine that failed to file their self-assessment by the revised. In fact, they failed to revise the self-assessment by the first quarter of this year. They were charged some interest of so much. I mean, it's a big client, and for them, somehow they can manage to get out of it. But then it's a smaller client with that amount of, and what it is that the law is now, the penalty is now 125% of Bank of Ghana rate.
Wow.
You see, 125% of Bank of Ghana rate, and so it's just not friendly, I must say. And I'm wondering how many businesses that would perhaps not comply with the law in that particular provision of non-compliance with a particular section of the law, then will have to be, impose penalty or so much. I think it's not the best. That needs to be looked at very, very, very soon, and very, very. It has to be revised to make it. I mean, collection of tax is a win-win situation. Some people may do things out of ignorance. Others may do things deliberately. Of course, you can't, in a society like ours, you can't say that everybody will do the right thing. But we need to have a fair and a balanced approach to dealing with these things. So if the penalty provision was so much previously, and now it's going to go far beyond expectation, I mean, that is too punishing for small, especially for small and medium businesses. Yeah.
Let me add a portion. Okay, let me add a portion. I'll allow you. Go ahead. Go ahead.
Yeah. Let me take it from where Isaac ended. You see, when we are advocating for a reduction in penalty, then it means that we are advocating for non-compliance. Why do you impose? So? Yes. Why do you impose penalty? GRA or the Ministry of Finance doesn't take any delight in imposing penalty. The 125% penalty on self-assessment is for understatement, and taxpayers who are allowed to self-assess have the opportunity under the law to revise their assessment even up to the last day of the abatement period.
We're talking about two issues now: understatement and non-revision of assessment.
Yes, the same thing.
The same thing.
Yes. What's happening? The 125% is when you understate your self-assessment. We compare your, let me explain here. Under the previous regime, we used to practice what we call provisional assessment. You sit in your office, the commissioner will just sit and bring you an assessment to say, come and pay this. We have moved away from that. The new regime is that you know your business very well, you know your activities, you know how you are going to fare in the year.
The projections you can make.
Come up with your own projections. But make sure the projections that you are sending are accurate. If you bring, I will explain. I will explain. Hold on.
Okay.
If you bring a projection in the first quarter, and in the second quarter, the third quarter, you know that your situation has changed, the law allows you to revise.
Okay.
So you can even revise up to the last day of your accounting year.
Okay.
You have that opportunity so that the margin of error should not be more than 10%. This is an opportunity granted taxpayers. So you bring your assessment and you don't do any revision, knowing that things have changed for you, then you underestimate. You're saying that you should just leave taxpayers to do things anyhow. I don't think we can. No. I see, this is the impression. Penalties are there to ensure that everybody comply. If you are prepared to comply, with the provision, who is going to charge you 120? And as part of your tax planning, you need to make sure that you avoid payment of such types of taxes. And one of them is this. So the issue of penalty is too high for taxpayers, meaning that we want to advocate for taxpayers not to comply or what. I don't think that is the issue. For me, we can put it 300% or 500%. If I'm going to comply, if you are not a criminal, why should you be afraid of the policeman?
Okay, if you were a business person, would you toe the same line?
Why not? You see, the issue with the self-assessment here, the self-assessment thrives on good record keeping. In most cases in our businesses in this country, record keeping is a big problem.
Thank you, sir.
It is a big problem. And that is where I will expect Nana to take it up with these people, that if you put your records right, you are able to make accurate estimate to GRA. You will be able to avoid this penalty. So I think we should leave this issue of penalty reduction. I think it's good for us.
I don't think we are advocating for non-compliance.
Yeah, I don't think
It's an exception to the rule, but honest mistakes are made. As you said, no good record keeping. So projections are projections. As the consequence of bad data, wrong projections were made. So you do not penalize. Do you allow room? As you said, after the last date, but because of bad data, they did not catch it. You know, nobody is contemplating and advocating for no tax cheating. No, we want every business to be in compliance of their responsibility. So it's together that we can encourage businesses. That's why you allow the self-assessment. That's why there was a recent letter where it says if you don't comply, we send the what do you call it? The tax force. You scare the daylights of the person. You know, look at the small businesses, the medium businesses, their capacity and capability to be able to do all this intricate accounting and record keeping. They cannot afford accountants. We got to work with them to make them compliant in every which way, not to scare them, not to intimidate them. Yeah.
But would you say that this new tax regime is not business friendly
At all. I would say that categorically, no. Because, look, as I said, maybe I'm privy to the fact that there's some adjustments coming that way. But if we had done that from the beginning, we wouldn't have this perception. It can be user-friendly, it can be business-friendly if we do all the constraints that are contained in the Act and adjust them. So the taxpayer doesn't feel intimidated. The taxpayer, out of volition, will get up in the morning that I want to do. You see, you're looking at 3 to 5 personnel private sector business. What capacity and leverage does he have to be able to manage all these compliance issues? Those are where you have to look at them and say, okay, we're going to work with them. The training programs that the maybe GRA itself had to conduct for private sector. Look, these are the ways to carry it. These are the ways to do the self-assessment. These are the ways to be in compliance. It will be beneficial to both sides to avoid the delay in the payment, the delay and the avoidance of, the tax that they require to do. So we need to work on that as to how to educate the private sector to see their requirements and their responsibility to comply. It's not a point where we think that, yes, the businesses, the people who may, cheat, but cheating is not something that is encouraged on a wide scale by any business association or any group of businesses. So we can educate them to know that. As we said, why did we decide to embark upon this awareness creation? Because most of our businesses were ignorant and couldn't even understand the merits of what is required of them. So we thought it wise that let's get together and try and get the attention so they know what to do. Because at the end of the day, if they collapse with jobs creation.
Are you putting together any proposals to government regard all these issues?
Yeah, at the end of the day, because we see some adjustments coming through. So at the end of the day, if those still persist, then we will look try and create an avenue for discussion to let government know with empirical data to support that this is what is inimical to private sector. So please, let's work together and make the private sector the beacon that you guys think that can produce for you. But let me bring a case that, on the petroleum, where GRA is expecting the OMCs to collect the fees and remit within 21 days. Now, and any petroleum that's lifted from the the bulk base, as soon as it comes out, the 21 days start counting, whether you have sold it or have not sold it. Now, these businesses now have to pre-finance. Most of their business relationship is for 30 days. But if you require them compliance within 21 days, that means they have not even been paid, much more to remit to you. So those are things that we want GRA to look specifically to certain sectors and say, look, these things are going to be destroying the businesses, so let's work with them to find ways that because after all, they collect in your behalf, and they're going to, remit in your behalf. And they don't get fees for the collection. So you have to be a little more, circumspect as to how you push them to the edge, because they have to pre-finance. Pre-financing costs. Who's eating that? The business. So those are the areas that we think we can work together.
I'm coming to you, Edward, shortly. But before I do that, and I'm back to you briefly. What do you make of business fund support to PEF?
Fantastic. Fantastic. Because without the BUSAC fund support to PEF, I can categorically say that PEF will be under the water today. Yes. Because what happened was that in 2011, PEF was almost collapsed.
Okay.
And through the BUSAC fund benevolence, PEF was able to engage the services of some consultants that reviewed our entire structure and do some strategic planning for us to be able to resurrect ourselves. As of that, PEF from that 6-member institution has now become a 50-member institution with some resources to boot. So the booster fund had been, to me, a backbone of support so far as PEF is concerned.
Mr. Jamina, are your doors or windows open for further deliberations because business has issues? If it is so, to what extent are your doors open? Or you think that once the new regime kickstarted in 2016, 1st of January, that's it?
No. Thank you very much. I think we are taking concern from businesses, and concerns are being discussed to see how best we can address some of these things, and our doors are open. Yeah.
To what extent?
Oh,
I'm just on that one.
Why don't now?
Exactly.
Whatever concerns that you have on the income tax law, you can bring them through the Commissioner General or through the tax policy unit, and it will be looked at.
Isaac, you are a tax expert. Should your members meet you and ask you, if there is any assurance regarding whether or not something can be done about these tax regimes on their business, what would you tell them?
Yes, I think like Edward said, there's always an opportunity to put together papers and whatever concerns that they have to be able to submit. I think the problem has always been the fact that people make suggestions and the suggestions don't go too far. Or
they end on a paper.
Exactly, because very soon we are coming to the budget period,
exactly.
And of course the professional associations will be
making input.
Yeah, they'll be making input. Individuals will be making input. PEF will be making input, and several other organizations will be making input. I know of Securities and Exchange Commission making some input for several years.
Wow.
But it has never seen the And so yes, people are. The tax environment, people are very active. There are so many people who think that for this country to do well, then we need to be tax competitive. We need to be tax competitive, and we don't just
tax competitive is key.
Yeah. You see,
key.
Yeah. So it is something that we have to position ourselves to be tax competitive, because sometimes people may not necessarily make a business decision because of coming to take advantage of incentive, but they want to look at the general tax environment. And if that tax environment is just fair enough, they're happy to come, and bring their investment to the country. And so yes, we have opportunities to make inputs into all of these things for a change. We talk with ourselves, we talk with ourselves informally, but we also do recommendations for improvement in the areas of the tax that they think are inimical to business. And I think that part of it is what we are doing here, and I believe that as we get closer to the budget period, a lot more of these things are going to happen. And I'm just hoping that the authorities would be open to consider these things. It shouldn't be paperwork. It should just be something that they can interrogate a bit further and see what can be done about the situation. But currently, the way businesses are looking at it is not
suspicion, yeah?
Exactly.
So where do we go from here, Nana Osebo? So
I'm trying to find a quote by the minister.
I've got about
the minister himself recently, when he had a graphic.
The roundtable
discussion in the breakfast, and right. I'm trying to find it. But the essence of it is that taxes are to encourage businesses to perform and create the revenue.
Encourage.
Yes. If that's the case, then let's look at it from the perspective of the encouraging businesses to grow. We are lucky in Ghana because Ghana is in the midst of francophone surroundings. Believe me, if some of these countries were English, a lot of these SMEs would have migrated to them, because the tax base in those communities are very low compared to what we have here. So if we are not careful and people start learning French and feel that they can survive in that environment, business is business. Business can migrate anytime. So we have to encourage businesses to stay. And to me, for the benefit of our economy, we have to grow our SME sector. Look, Switzerland, Netherlands, and all, they're not big institutions, not big corporations among them. They're all, SME based. We can be SME based and survive and grow to the point where government doesn't have to have sleepless nights, but get the revenue based to allow them to, execute the agenda. We can do that together.
After this has our final comments today, not so much time again, but Edward, give me your final words, about 20 seconds. 20 seconds to do as we wrap up.
Thank you very much. What I will encourage businesses to do is to comply with the tax law, and every person that is earning income in Ghana should do well to comply with the tax law. I think that one of our basic problems in this country has to do with compliance to the tax law. Of course, we have only few people that are in the tax net, and because of that, we tend to have, in quote, higher tax rate and other things. If all of us are going to resolve,
tax managers
if all of us are going to resolve to ensure that we are all going to comply with the tax law, I think it will help all of us to minimize our tax rate in future.
Isaac, you 15 seconds for me, please, and we go. I don't want to cut you. 15 seconds quickly, and we wrap up.
Yes, I mean the new law has become effective, and so that is a substantive act. I think there's a lot more work to be done on that new law. I believe if we had done sufficient consultation on that law, we wouldn't have had it the way it is. And things would have been much. And I think that I want to encourage government and authorities that as far, because tax payment is about money, and people are very careful about how they give out their money.
All right.
So yes.
Thanks very much, Mr. Isaac Nyami, Tax Expert PEF, for our time this evening. Many thanks to you, Mr. Edward Jamina, Deputy Commissioner, Policy and Programs, GRA, and appreciation to you also, Nana Osebo, Chief Executive Private Secretary Federation, for our time this evening. Even another edition of the Business Advocates. We'll get back to you again next week. God, until then. The topic had been implementation of Income Tax Act 2015 at 896. We'll get back to you again next week. Till then, good evening and bye for now.